for those people who are first-time home buyers, or maybe it's been a while since you bought one, there's concerns and questions about mortgages, and I want to talk about it. So let's talk about home buying myths and misunderstandings, misconceptions.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
All right.
Okay, the first one, I need to have a lot of money saved, at least 20% down, right, John? I got to have 20% down, right?
No, that's mechanically not true,
Okay,
right?
all right.
Certainly, there was a time, maybe your great-grandparents needed to put 20% down because there were not these sort of well-regulated programs out there. But the standards today, you have a wide range. Could be zero down,
Right.
potentially, if you're thinking VA or one of our down payment assistance programs, where you're literally coming in with zero money for the down payment. And then there are more normal programs where 3% or 5% are typical small down payment requirements for homes. You can do second homes, like your vacation property. You could do that with 10% down in the market. You could buy investment properties, 20%, but better if you put 25. You can, there's more options than people realize.
Right.
And I would certainly be the anti-Dave Ramsey and advocate that even if you can only do a small down payment, better to get you into that house,
Right.
get you owning something for a long time rather than keeping you out of the marketplace. I think that's more in your interest
Right.
than saving up for 20% or something like that.
Now, I remember when I first, and I was thinking about this before the program, before I became a realtor and before all of it, I got involved in real estate, I bought my first home, and there was a lot of anxiety about that. And that was one of the points. Geez, how much money do I really need?
Yeah,
I mean, that's a big concern. How much money? And I didn't. And I was able to get in with a FHA loan,
Right.
3.5% down.
Wonderful, right?
And then I had.
It's been that way for many years, 3.5%.
And I got my seller to help me with closing costs. That's all I really needed.
Right, and this goes back to what you're talking about. In this moment in the market is we are seeing the sellers help to pay closing costs,
Yeah.
which really reduces significantly, almost by half,
Yeah.
the amount of cash you would need in one of these small down payment programs. And they're not terrible programs. It's not like they're wildly more expensive or have significantly worse interest rates. In the sort of traditional vanilla world of mortgages, the downside there is a little bit, but it's not painful or
Right.
punitive.
Right. I think that people need to understand the nature of what sellers are still doing in terms of commissions also, because last year we had this big change in the way we administer commissions, and sellers are still, for the most part, each deal's unique, but sellers still, for the most part, are helping buyers pay their agent as well. So I just want to make sure that I make that point clear.
A buyer should not be afraid. And I always want to chime in on this sort of topic with this whole commission lawsuit and stuff that you guys went through. A buyer should not have a fear that they need to have all this extra money to be able to pay their buyer's agent's commissions, right? The reality is you don't have to say yes to any deal that doesn't mathematically work for you.
Yeah.
So if this seller says, no, I won't pay, you find a different seller that will.
That's right.
Right?
Yep.
You don't have to say yes to a deal you don't want.
Indeed. And I think that's a great point. And that's one thing I point out to several of my clients when they say, well, gee, I don't know if I can afford that. I said, listen, if the seller's not going to help you, you're not going to buy the house.
Right.
That's just the way it is.
That won't be the house for you.
And you're not going to sign a piece of paper with money you don't have.
Correct.
You're not going to do that. I'm not going to let you do that. We're not going to do that. We're going to make sure we protect you.
We'll be able to tell you, here's your budget. Does it work or does it not?
Right. Okay. So the other thing is okay, so I don't need 20% down. I can get in with less. If I'm VA, no down payment. And if I'm FHA, 3.5, and there's conventional
starts at 3% down if you're a first-time home buyer, or if you're using a community assistance version of the loan, or 5% if you're not a first-time home buyer. So not giant numbers ultimately.
Okay, so great. So that's good news. But I better have a really great credit score to do this, right, John? I got to have a great credit score.
I love that you would have, you want to have a great credit score, and you'll be. In some programs, you'll be rewarded for having a high credit score, but it's not a requirement. Once again, it's not a closed door or a stop sign for you. There is financing really all the way down to 580 that I would consider reasonable.
Okay.
And there is stuff that even goes lower than that, but there's usually trade-offs or consequences that start to become noticeable.
Let's say, let's play that out a little bit. Let's say let's say my credit score is 525.
Ooh.
Okay, I need work. I need work to be done.
Yeah.
Okay.
Yeah.
Can you help me with that?
I mean,
And how long would it take me to get to a number that's going to work? I mean, is it?
That's entirely, it's like saying, what's your fingerprint? You know what I
Okay.
mean?
All right,
It's
okay. That's fair.
Your answer, your pathway will be unique to you because it is all about the circumstances that you have in your history and on your report, right?
Right.
So if you were 525, you could potentially solve that in a month.
Okay.
Or it could take you a year.
Okay.
Right?
All right.
Nobody is a bad score forever.
Right.
Nobody is a no forever on mortgages. It's a yes when you do something, or yes
Okay.
if you can reach this point, right? There's always a pathway to get you there. It's just a matter of whether or not you can do it.
And I think I want the listeners to understand, if people are thinking about buying, I want them to also understand you've seen it all. It's not
Yeah.
you're not
Yeah.
they're not going to scare you. I mean, come, if you're listening to this and you're saying, gee, I'd love to talk to John about maybe getting a mortgage for myself and buying a home, text John to 702-203-1165, and I'll put you in touch with him. He'll help you. I mean, this is
I'll
what
try.
we do.
Yeah.
This is what we do. We like to do this, and so we love when listeners reach out. Happy to help out. So,
And I don't begrudge the conversation that says, okay, here's my circumstance. I may not be a yes today. Here's your pathway. That's a worthwhile conversation
absolutely.
for you and me, because
Yeah.
whether you're a client today or a year from now, still a client. That's wonderful.
You and I
right?
think very much alike.
Right.
It's not. It's very always for me. It's always been. I just want to be your realtor, whether you're buying right now or not.
Yeah.
Let me be your realtor. Let me help you out. And so, if you're that person and you're listening right now, call me. I'll help you out with the purchase, and John will help you out with the mortgage.
And
it
please-
might be a year from now, or maybe
Sure.
longer than that before we can get you done. But we're going to get you done.
Yeah, and please, everybody listening, do not self-disqualify.
Right.
Okay, that's the biggest mistake people make. But don't believe you can't without talking to an expert first. Right.
Absolutely.
Let us show you your path.
And we're giving you some of the guidelines right here and right now. Like, for
Yeah, we're
instance,
talking through.
one of the things I do have to be in my job for at least 2 years, right, John?
That's a common thing that people, like, at least realtors, I run across it all the time.
Yeah.
But people think I just changed jobs and therefore I can't buy. I need to be on my job 2 years. This is not a true statement.
Okay.
There's a ton of subtlety inside this, but effectively, if you have stable income for 2 years or more, you're in the game. Whether it's one job or 3 jobs is not a deal breaker kind of thing. There are subtleties to this, such as how you get paid makes a difference, whether it's a completely variable income like commissions or tips versus I'm a hourly or a salary person where my income is basically the same every week. There's subtleties around that, but certainly I don't need you to be at the same job for 2 years.
Do I need to be in the same industry?
Not even automatically in the same industry.
Okay.
So
all right.
I like to use this example of pretend I work in the warehouse at Amazon, right? I've been doing that. Now I've got a new job and I'm the CEO of the radio network, right?
Nice.
That's cool for you, but that I need you to be doing for a while. I need you to stabilize
That's a
in
major
this
switch.
specialized position is the idea.
I get
Because
it.
there's no track record of you being able to obtain another specialized position like that necessarily. So there is a time period you would need to wait on that job. Likely could be as much as a year, but not 2 years even,
Okay.
right?
I have to sell my home to buy a new home. I better sell my home or I can't buy a new home.
No. I mean, you certainly are allowed to own more than one home.
Yes.
You're something hiding inside here. I get quite a bit that's along this line is I'm a veteran. I own my home using my VA loan. I'd like to go buy a new one. Do I have to do something with my old house? Do I have to sell it? Do I have to refinance it out of the VA loan? No, you don't. You can keep that VA loan, that FHA loan, on your old house and go purchase the new one, right?
Right.
All that's okay. Now there's factors related to how you qualify, such as can you afford to carry both house payments? That's one thing. Are you getting rent for the house that you're leaving? Different circumstances about that come into play, as well as do you need cash from the house that you have now to be able to get to the next one? These are all circumstances that there's a ton of nuance and sort of optionality in how you can approach these solutions.
Yeah, when we talk about this topic, I talk to my clients when they're talking about selling and buying. I talk to them on what I call the gap and the overlap. I've got this house and I'm going to move into this house. if I sell this house before I can get into this one, I've got that gap.
Yeah, where do I go live?
Where do I live? Right.
Yeah.
And then the other one is the overlap. Gee, I can't get this one sold in time to get this one
Now
bought.
I'm carrying two house payments, and I don't like that.
Yeah, so that's the overlap. So we talk about trying to make sure we match it up so we get you out of one into the other simultaneously, so you don't have that problem. But sometimes it doesn't work. We got to look for that. We've got to be prepared for the worst case scenario. And that relates to what you were just talking about in a sense. And do I? Because I probably need cash out of the house, and I always talk about taking the equity from one home and moving into another. That's that's just part of home ownership. But no, I have a bunch of clients who have multiple homes. We have investors who have multiple homes. So yeah, and I think it's important for people to understand as an investor outside of home ownership, real estate's just a great investment. It's just a smart investment over the long haul, always performs, and it's something you should be thinking about. If you're thinking about putting your money somewhere other than maybe the stock market or whatever.
Bitcoin or gold or one of those silver, guys. Who knows?
Yeah. So then
they all have their place.
Think about having a second home. And the other thing about that is, and I love this concept, and I've had several of my clients, we've talked about doing it, and they've done it. When you have a child, buy a home.
Oh, I love this too.
Buy a home, rent it out.
Right.
And when your child's
18,
ready to go to college, guess what? You've got a huge amount of equity in this house because someone else has paid the mortgage for you. You can give that home to the child. They can live there. They could sell it. They could pull money out of it.
Use it to pay for the child's college. That's
what a head start you just created, and it's just a brilliant way to handle it.
You think that $100 savings bond is good?
Oh yeah, let me tell you. Yeah.
Try buying a property for your child.
Anyway, okay, let's move on. So
all right.
So the next, we talked about the VA. So
there's a misconception I like to bring up because I was talking about veterans and VA loans. Is I've talked to some veterans and they believe that because it's a VA loan, I don't need any money to buy the house, right?
Well, yeah, we've heard that before.
And so that's a little bit of verbiage problem because yes, there's no down payment mechanically required,
right?
But there are closing expenses that you're exposed to.
Yes.
And unless you get a seller to pay them or find some way to get them paid by someone else, you will be paying those out of your pocket as a veteran, right?
And if you're listening to this and you're thinking about doing it someplace here in Southern Nevada, I'm going to tell you the average cost if you're doing a financing, the average buyer cost above and beyond. And this is very general, guys.
Yeah.
It's around 3% of the price of the home, 2.5% to 3% of the price of the home. Just so you keep that in mind. Okay.
And that's more, that gets you to sort of a real life bottom line where you're not playing word games with stuff and saying, okay, closing, because this is a big problem in my industry where people will talk about closing costs being only the money that's paid to the lender. No. That's only part of the story.
That's
right?
one element of it.
And there are distinctions that we draw with words, but they all wash away to the idea that closing costs should be everything that you pay for in fees to be able to buy that house. Separate from down payment dollars, everything else is a closing cost.
Yep. So once I'm told, if I go to my bank and I ask them for a mortgage and they say, no, I'm done, right? I can't, I tried, I'm done. Can't talk to another lender. That would not. Yeah.
Sure.
Well,
that would not be my advice. And certainly, you mentioned banks. Banks and credit unions tend to have the smallest boxes for people to fit in. Right. They have a risk appetite that's fairly clearly defined, and they're not interested in going outside those lines for various reasons.
Yep.
Good reasons on their part where they don't want to give bad loans to people that fail,
right?
As well, because they'll be punished by their regulators as well as by the transaction itself, right? But there are alternative mortgage bankers out there, which is what I do. Is I'm a mortgage banker.
Right.
I don't work for a bank. I work for a mortgage entity that is trying to do every kind of good, safe mortgage that we can do.
Right.
Right. And that tends to give us more options than a person with a clearly defined one pocketbook that they're dipping into as a bank or a credit union. And along these lines, it goes back to one of the things we talked about where do I need to sell to be able to buy? There's a great expanding world of alternative loans outside of Fannie and Freddie and FHA and VA that are really solving a lot of solutions. One of the solutions it's giving is for people who own a house, want to buy the new one, but the old one won't be sold first. There's programs out there that now are allowing us to exclude the payment for the old house as part of your qualification.
Nice.
So now you don't have to make so much money that you can afford two houses at the same time, you can simply exclude the old house and focus on what the new house is going to be based upon other factors. Like, hey, I can see that you have a good safety net of savings, this
Right.
kind of thing. You can dip into your savings and pay both house payments for a while. You don't need the monthly income. You can rely on other bridges and such.
Interesting.
So, yeah, it's really, there's a lot of solutions, a lot more solutions than people realize. So if you're ever told no by one person, I would definitely recommend getting a second opinion to find out, is this industry-wide rule? Is this a specific rule for that particular lender?